What's up, Square Bears? Let's talk about some Investor Central Club flow recap from today. This is episode number 2, and basically we're here to see where the money went. This isn't going to be speculation. This isn't going to be, I think. This is going to be, this is where money is, this is where it went, and this is why. So let's go ahead, talk about Tesla. That was our FlowScanner leader of the day. Saw about 117.5 million in total flow, 55 million going into calls against 62 million in puts. Again, big casino energy coming from Tesla. Now, when we look at what our most traded contract was, which all you have to do is click this, it'll tell you how many times it was traded. We can see the 450 calls for next week actually were traded 7 times today. So that was our most frequently hit contract. These are 450 puts, probably a delta hedge if we're being honest. So this is allowing them to buy protection. This is not some kind of bearish bet. This is just being hedged against volatility, right? Now, we can see that we have weekly puts against this, but if we look at our overall scanner on Tesla for the day, let's go ahead and see where were our biggest premiums spent. We can see the leader today was 43 million going into March 20th of 2026 440 calls, and that was bought at the 435 spot price. As we can see, Tesla grinded down lower because we have some puts that were bought at 429, some calls that were also bought at 429, and those were for 550. We had about 4 million dropped there as well. Basically, the way this positioning looks to me are big guys are expecting some kind of movement, not necessarily a crash with Tesla. So I would not take it as like a directional bearish sentiment against them right now, because in my opinion, my dad actually sent me an article talking about how like the similarities between Halliburton in oil and Elon with AI, and how he's essentially building an empire. It's not just about cars anymore. XAI and many other things that kind of play into that narrative overall. Now, our second leader of the day today was SPY. We saw 56.3 million in flow, with 11.79 million going into calls against $44 million in puts. Our most traded contract with 10 hits today were the 697 calls due for January 23rd, about 2 weeks out of 2026, bought at the 690 strike. As we know, SPY did hit new highs today. Again, this is just dealer's defense. SPY is still the hedging vehicle of choice right now. This is not the sky is falling flow. This is just portfolio insurance when we see this kind of skew against flow. Like, despite it being quote unquote bearish, the most hit contract were calls for that 697 strike. Our most dealt contracts, though, we're seeing 590, 540s. These are way out of the money. A 21% and 14% move were our top flow. Also a 9% move. When you see that much downside expected, it's safe to assume that this is just insurance at the end of the day. This isn't necessarily like stronghold held conviction where this is what they think is going to happen. But we can also see there's no real front month panic here. So we're not seeing like a bunch of these puts being bought for next week. These are pretty far out. 130 would be the closest that we're seeing here, right? Everything else is like, come on, we're looking at December of next year. So just think about funds. This is how they hedge exposure, okay? They're not necessarily giving direction and saying this is where we think SPY is going to be. Now, our next ticker we're going to go ahead and take a look at will be NVDA. Now, this is what you call conviction. We had 23 hits. 23 hits. And these are like the ultimate. This is the equivalent of owning a stock but not having to buy the actual stock. These are in the money like a mofo, okay? 185s being bought at the 189 level. We can see at the 188. These all came in the money, okay? It's an institutional favorite. This is where people like to park money a lot of times. As we've seen, they are willing to buy out their competition and acquire IP to keep their mountain, right? So that's easily one of the best tapes on the board today. We had 42 million in flow, 38 million in calls against 3 million in puts. Again, we're just giving the straight numbers. I'm not going to go in and read the details. But again, this is one of the best tapes that we've seen today, right? So think about it like this. Funds are essentially just pressing for an upside here. Buying in the money, $4 in the money, in some cases $5 in the money. This isn't hedging. This is just pushing for upside, and maybe 185 is that support that NVDA starts to form before we see it go higher. Now next up we have SLV. SLV, we saw 40 million in flow, 29 million going into calls against 10 million in puts. This morning we saw a nice run up on SLV. A lot of people are hyped on it. Retail's hyped on it. Does that mean this is the top? Well, not necessarily. It's quietly telling you a story about rates, inflation, and the uncertainty that lies within these hedge funds, the Federal Reserve, and, well, other things that actually affect the stock market, right? Calls are heavily outweighing puts, as we can see. This is macro hedge behavior, meaning people are parking their money with SLV because if we look, the most hit contract was in the money pretty much all day today, right? Does that show you conviction? Not necessarily. It shows that people want to park their cash somewhere safe. SLV is that safe bet right now. So we're going to see silver acting as a non-equity risk hedge, kind of like how people were treating GLD about a year ago. So that's how we're reading SLV today. Now, IWM is next up on our list. And by the way, these expire for next week. All right. Now, IWM is next up on our list. We saw 23.48 million in total flow. We saw 6 million in calls against 17 million in puts. Now, our most hit contract were the 244 puts due for February 20th of 2026. Are we really shocked at this point? Small caps will always remain that pain trade that, well, hedge funds and funds are going to take, because until a rate cut comes through, you don't really see pumps with them that often, if we're being honest, right? So that's what we're seeing with the IWM. Persistent put dominance. We've seen this going on for almost a month now. There's a weak breadth signal, meaning like we're not seeing much upside, and institutions are not willing to rotate into that risk yet on these higher for longer rates. Now, our final ticker we're going to review today is Google. We saw 16 million in total flow with, well, all of that going into calls, and it went into one call in specific. We saw the 310 calls, again, a delta hedge at 16.37 million, and this netted them about 7,500 contracts. This is just clean call exposure at the end of the day. This isn't a hedge. This is longer dated optimism because we're looking at March 20th of 2026. And this is just showing that smart money wants to take their nibble out of AI, but not necessarily chase it down to the ground. And then we have Apple, 15.97 million in total flow, 7 million going into calls against 8 million in puts. It's looking like NVIDIA tape back in the day. People are going to treat this like a casino. I mean, I would say it's more defensive to neutral. We're seeing balanced exposure throughout this because despite this being quote unquote bearish, the most hit contract were these $300 calls due for March 20th of 2026, showing that there, despite some downside that we've seen with Apple over the last week or two, people still have that faith in it. Yeah, so that's pretty much all we got for you today. This market isn't being euphoric right now, how most people thought it would be in the beginning of the year. This is all strategy and positioning. I told you this in the beginning of the year in our kickoff video for 2026. This is going to be a year of positioning. This is not going to be a year of euphoria necessarily. So conviction play of the day was NVDA. Our hedging plays of the day were SPY and Tesla. Our macro hedge is SLV, silver. And who has the weakest breadth of the market right now? Well, IWM. If you're only watching price, guess what? You're already late. And if you're watching flow, well, you could be early. Everything you saw tonight came from Investor Central Club's FlowScanner. If you want to stop guessing and start actually reading institutional intent, go ahead and check it out. There is a link in the bio of this video that you can go ahead and grab. I hope you all have a great night, and I will see you guys for episode 3 tomorrow.